Hello, welcome to Modern Wall Street's Trader Talk. It's Thursday, which means you know who our guest is. It's Matt Cheslock from Virtu Financial. Matt, hope you had a nice holiday weekend.
I did, Livia. And you?
I had a great one, thank you. It's nice living down the shore, right? You can't hurt there.
Yeah, we finally get some sun. Maybe we can finally enjoy it.
Exactly. That's why I am bearing yellow today. And while this week flew by, it's going to end with a boom. We have non-farm payrolls tomorrow, but we also have a lot of data prints today. ADP, we have auto sales trickling in, ISM. What are you paying attention to and why?
You know what's funny is I think most of the economic data has been soft, and everyone's trying to account for, is it a one-off? We're expecting a June rate hike. I think we're going to get it despite any number that we get out of the non-farm payroll tomorrow. So this one's probably going to be the lowest impact number that we've seen. But now there's a lot of talk about maybe no more rate hikes in the future, maybe up to 3, depending on who you're talking to. So there's a lot of confusion. So we're really looking forward to this Fed meeting, I think, to finally give us some clarity for the second half of the year.
Well, can you give me some clarity on this collapsing yield curve that we have?
Not really. One thing that's been affected the most by it is the financials, and they suffer when the 10-year and the 2-year yield is less than 1%, and that's what it's really getting to. And the financials have been suffering. So it's not just the interest rate hike confusion or maybe lack of clarity. It's that yield collapse too.
Right, and then yesterday, Bank of America and JP Morgan announced that their low volatility is hurting trade revenue. Yet the New York Stock Exchange posted its highest margin debt again. So what do you make of the entire trading environment?
Well, it's interesting, the old adage, sell in May and go away. And, if we're talking about JP Morgan and Bank of America are already seeing trading volumes decline by 15% year over year for the last quarter, what does it bode for the summer? June, historically, some big print days with a lot of rebalances. We had a big one yesterday, and we have some coming up with the Russell and some of the gold indexes that are in mid-June. So there's going to be plenty of time to put a portfolio together or to unwind any position that you have a portfolio in. So I wouldn't look too much further past June as far as volume goes.
Okay, so we unwind and enter where now, Matt?
We've got some conflicting opinions on the Paris Accord today as well. We've got the oil number that came out. Oil really didn't do a whole lot. It really hasn't bounced through 50 with any kind of clarity. It's probably going to test 45 before 50 again. That's the seeming what we're seeing. But, this Paris Accord, I think, is going to be very interesting because it's going to be so hyper-focused. 2 years ago, no one would have known, no one would have cared. Now we're focusing on it, and we'll see what it does to the energy sector.
Will be interesting to watch. Well, Matt, thank you so much. In the meantime, we're going to have a great weekend and hope to see you next Thursday.
Yeah, absolutely. I wish we was off tomorrow and play some golf.
Exactly. Thank you. This is the Boz reporting live from the New York Stock Exchange.